Terrific. Welcome back. I'm really excited about this next portion of our agenda. This presentation will be kind of a sector overview. And what I'm really excited about is for the ability for our analysts to really work through and exhibit the sector expertise that they work on a day in, day out basis. The first presentation will be done by Daniel Piderit, who covers the cement companies. And then in conjunction, we'll also have a detailed discussion with Loma Negra. But let me welcome Daniel Piderit to the stage.
Thank you, Frank. So my name is Daniel Piderit. I am an investment analyst at INCA. I cover the cement, construction materials, real estate, and airline sectors. I joined INCA in 2015, coming from a long-short U.S. equity hedge fund in New York, and prior to that, I worked on the trading floor of Goldman Sachs, also in New York, trading equity derivatives. I'm a CFA charter holder, and I'm originally from Caracas, Venezuela. So happy to take your questions on Venezuela as well. So next presentation is going to be a presentation, like Efrain mentioned, on the cement sector and in Latin America and the opportunity that we see in this sector. So as a brief point of reference in terms of the listed cement sector in Latin America, it actually has a pretty small weight in the MSCI Latin American index of only 1% for the sector versus our INCA exposure of 10% of our portfolio. So I think it's very relevant for us to have this kind of presentation and explain a little bit about what we see in terms of big picture, long-term opportunity for cement growth and cement volume growth and consumption growth in Latin America, given the significant overweight that we have for the sector in our portfolio. I guess the first point I want to highlight is that cement is largely a local commodity with a small radius of consumption, given its low value to weight ratio. So what I mean by that is that cement is just too heavy and too cheap to be moving around too far. Okay, so what this generally tends to do is regionalize the industry across the world, and this is specifically accentuated in Latin America, where some of the local players, some of them which you can see listed on the table on the left, are local players with meaningful leading market share positions. And then the second point to highlight in this slide, I guess, taking a step back and just kind of answering the question, why cement important? Cement is important because it's an irreplaceable construction material, given its combination of strength, resiliency, durability, and affordability. So in terms of concrete use, we can date concrete use back to 6500 BC. So that's a pretty long time ago, and to this day, there's still no practical substitute for it. And you'll hear me mention concrete and cement kind of interchangeably. So as a point of quick clarification, cement and broken stone or gravel is mixed with water to form concrete. And concrete goes into some of the major works that surround us in terms of homes, buildings, roads, highways, bridges, tunnels, etc., you name it. So again, this is something that is very important for us to discuss. This kind of takes us into the opportunity that we see, and where do we start? We start by just mentioning that Latin America cement consumption remains very much underpenetrated versus other world regions, as you can see in the chart here, and especially versus other emerging markets, which is really the fair point of comparison. So from this starting point, we see that there's a large gap for consumption in cement in Latin America, and that large gap provides a lot of opportunity for growth and for Latin America to catch up, right? So I guess the next natural question is, okay, so we see the opportunity set. What are really going to be the drivers, right, for this catch-up or this growth? So we start first with housing, given that roughly 60% of cement in Latin America goes to housing. And the chart or the picture on the left kind of displays some of the housing deficits across selected countries in Latin America, and housing deficit being measured by the percentage of households that are in substandard or inadequate conditions. So Latin America has a very large housing deficit, as you can see, 45% in average for the region, which equates to roughly 65 million properly built homes that are needed for the entire region. And as a matter of context, the housing deficit in the US is below 6%. We believe a big driver or a significant driver to addressing this housing deficit problem will be the improvement of mortgage availability for the region. As you can see on the chart here on the right, we have mortgage penetration for different countries or different places around the world. Mortgage penetration defined as the percentage of adult population with a mortgage. As you can see, Latin America, even though it's an improving situation, still lags the world meaningfully, with Chile, which is the Latin American country with the largest mortgage penetration, not reaching even half of the world average. The second kind of avenue of growth that we see as very meaningful for cement consumption is infrastructure. And the bottom line is that Latin America will need to invest more in infrastructure. History shows that better connected geographic areas tend to prosper more. This is because better developed infrastructure lowers the cost of transportation and transaction costs, et cetera. As you can see on the table on the left here, private and public infrastructure as a percentage of GDP in Latin America, where compared to other developing regions of the world, is second to last. So there's a lot of room to grow there. Within infrastructure, Latin America actually scores relatively well when it comes to access to water, around 94% of households, and electricity, around 96%, as well as the cleanness of energy, since it's mostly powered by hydro. But it is transportation that is the biggest bottleneck in Latin America. Roughly only 20% of roads in Latin America are paved. And when you talk about road network congestion, as a measure by the number of vehicle miles traveled divided by the number of miles that are paved, Latin America scores the highest in terms of road congestion. So, that's really the bottleneck. That's really the area to address. And there's a lot of cement consumption that goes into roads. The table on the right here shows the worldwide ranking by the World Economic Forum of quality of roads for selected nations. Here, just as a point of reference, and we can see several Latin American countries that are ranked in triple digits. Okay, so after discussing those kind of avenues of growth, and so we understand the opportunity set, and then what are going to be some of the drivers, we turn into the cement industry itself for Latin America. And Latin America has strong market leaders with strong market share positions in an industry that is highly consolidated and with high barriers to entry. As you can see in the chart here, most of the major Latin American regions, 3 cement makers, 3 companies make up 80% of the production capacity, so pretty highly consolidated. And furthermore, we can note that within each country, the number 1 player in each country at the base of each column is a local company. So Ultracem is a Peruvian company, Cementos Argos is Colombian, Loma Negra, present with us today, is Argentinian. So that's kind of what I mean. Right. So I guess along these same lines, this high concentration for the industry in Latin America tends to lead on average to better profitability for these cement makers as compared to more fragmented regions like the US and Europe. Obviously, within each country, there can be a lot of variation from company to company in terms of operations, et cetera. So I guess before we turn to this slide, kind of talking a little bit more about, okay, so what leads to this high consolidation, high concentration in Latin America, and what are some of the barriers to entry? I think there are several, but some of the main ones to point out would be, first, the high startup costs and long lead times. So I would consider that the smallest economical cement greenfield is really, that makes sense, is really 1 million tons per year, and that's going to cost around $300 million, take at least 3 years to take to completion, and that's if you can get the government permitting, which can be really complicated in Latin America. So again, it's very costly, it takes a lot of time, and it takes permitting, etc., a lot of know-how. So that would be the first barrier. The second I would mention is the complicated logistics of distribution to the end markets. Cement in Latin America, around 2/3 of it is distributed in bags as opposed to in bulk, like it is mostly in the US and developed markets. So what that implies is it means supplying thousands of retailers spread across a largely mountainous terrain with poor road infrastructure, as mentioned earlier. So, very complicated distribution networks that take a lot of time to develop as well. And then lastly, we mentioned the best quality and the most productive and the best located limestone quarries are already in the hands of the leading players. Okay, so after kind of going over the barriers to entry for the emergence of competition locally, I guess the next question really is competition from abroad, right? Because at the end of the day, cement is a commodity. And as I mentioned in the first slide, cement is largely a local commodity given its low value to weight ratio, which disincentivizes globalization. But having said that, there will be a price, right? There will be a price at which it will make sense to import from abroad, from countries that do have overcapacity in cement, those mostly being in Eastern Europe. So this is where the concept of import parity comes in. And import parity can be defined as the all-in cost to bring a commodity from abroad to compete with local production. And this kind of import parity concept is kind of a moving target, as it involves many inputs that are kind of independent of each other. Some of these inputs will be, firstly, the base cost of cement in the home country, right? Then there will be global maritime freight, which in turn is influenced by global fuel prices. Then there will also be a variety of import tariffs in the destination country, as well as local freight to bring the cement from the ports to where it's actually needed. And I guess lastly, a profit margin would be nice as well, right? So, when we kind of take all of this into consideration, we don't believe that in any of the major or the largest Latin American countries, there is a high risk of imports for the local players. As you can see in this table here, in this chart, we kind of source the cement prices, the local cement prices for each of these countries in dollar terms, and they all sit comfortably below what we consider to be the average import parity price. So we have strong barriers to entry locally, and we believe comfortable room from imports from abroad. So that's why we think it's the local players that are going to benefit the most from this growth in cement consumption that we've discussed in the previous slides. So I guess kind of to wrap up, some of the main points that I would like to leave you with in terms of recapping is first that cement is an irreplaceable, critical construction material with no practical substitute. That cement is mostly largely a local commodity due to its low value to weight ratio. That cement in Latin America is a highly consolidated industry with large or high barriers to entry. And that lastly, cement consumption in Latin America is still very much underpenetrated, and we see a big opportunity for a catch-up in cement consumption per capita that will be largely driven by improvements in housing and infrastructure. Okay? So after this big picture, long-term kind of discussion about where we see cement consumption and the trends in Latin America, I'm very excited to give the stage to one of the premier Latin American cement makers. When I talk about one of the best cement companies in terms of operations, not only in the region but in the world, Loma Negra, that is. Loma Negra is the largest cement producer in Argentina with a commanding market share of roughly 45%. It's also the number 2 player in the smaller market of Paraguay. We're definitely very excited to have him here. I think what kind of stands out about Loma Negra is its consistent ability to generate operating margins that are above industry average, even through periods of macroeconomic instability like we've seen. Very tough macroeconomic periods, the continuous ability to high margins are significantly above average. So very excited to give this stage to Loma Negra. Today we have Marcos Gadin, Loma Negra CFO, and Gaston Pinel, Head of Investor Relations. So thank you for being, guys, and welcome. Thanks.